Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are analyzing 4 companies. We're going to start off analyzing Chargepoint Holdings, and then after that we're going to move on and we are going to analyze Plug Power. Once we're done that, we're going to move over and talk about Nokia, as well as their recent partnership with Marvell Technology, and then lastly we're going to end with analyzing both the stock price and the fundamentals of the company known as Fisker, which is an electric vehicle company. If you're not familiar with any of these companies, don't worry. I will give you a quick summary before we dive into them, and then we will determine if they are good buying opportunities. So if you want more stock news updates just like this one, remember to go and smash that like button right now, comment your thoughts down below about any of these companies, subscribe if you are new, and without further ado, let's jump right into today's stories. Chargepoint Holdings Inc., ticker symbol CHPT, is currently trading at $11.99. This company is an electrical components and equipment company, and essentially they provide electric charging station solutions and electric charging vehicle networks across the United States as well as internationally. Recently, this company had a buy rating by an analyst from B. Riley who reiterated how great this company actually is, and he gave this company a stock price target of $18 per share, which is clearly higher than the stock's current price of around $11. So if you want more exposure to electric vehicle charging companies, Chargepoint is one of the best that you could diversify into, so it gives you more exposure to this particular market. On the other hand, we have Plug Power Inc., ticker symbol PLUG, and this is an electric components and equipment company that essentially delivers an end-to-end clean hydrogen and zero-emission fuel cell solutions to various consumers. And I really like hydrogen technology. I want to say that again. Hydrogen technology, I think, is going to be the future. So for this company, what about their fundamentals, and is it a good buying opportunity? Well, currently the stock is trading at around $15 per share, while professionals in this space believe the company should be worth anywhere between $15 on the low end to $78 on the high end. So let's dive into this company. According to analysts from Citigroup, they reiterated a buy rating for Plug Power, ticker symbol PLUG, and they currently have a $20 price target, which I 100% agree with. The current share price is $15, but it could increase to $20 over the next 12 months, as long as they continuously beat their overall forecasts. Many investors believe that Plug Power is ripe for the picking and investing right now because over the past 5 years, they have returned a CAGR, which is their compounding annual growth rate, of around 41.2%, which is an outstanding performance that outperforms the overall broader market. The company is also well capitalized, meaning that they have a lot of net cash on their balance sheet and or cash equivalents, which is currently valued at $2.29 billion, and they can literally use that money for anything they deem fit. The analysts also believe the company will continuously grow their revenues from now until 2026 at an amazing clip. So getting into this company early may be a good buying opportunity, but I always want you to make sure you are doing your own research to make sure these companies match your own risk tolerance and your investing style. Up next, we're going to talk a little bit about Marvell Technologies as well as Nokia. If you're not familiar with either of these companies, Marvell Technologies is a leader in data infrastructure and semiconductor solutions. Right now, Marvell's current share price is hovering at around $42 per share. However, given their current stock price target, analysts believe the company should be worth minimally at $52 per share and maximally at $125 per share. So clearly there is great upside opportunity in this semiconductor solutions company. But the great part about this is that they recently announced an extension with their collaboration with Nokia, who is a powerhouse and a 5G provider. Nokia right now, ticker symbol NOK, currently trades at around $4.70. However, with that being said, many investors believe this company is somewhat undervalued and or overlooked, because at minimum, they believe the company should be trading right now at around $5.34 or as high as $8 per share. So clearly there is upside potential in both of these companies. These two companies have worked closely with one another regarding a new data processing unit, also known as a DPU. which will provide best-in-class 5G support on top of being built on top of a very impressive cutting-edge processor. So overall, this is an absolutely fantastic combination between the technologies of Marvell as well as Nokia. The senior vice president regarding the business group at Marvell in terms of their processors said, and I quote, "Marvell is thrilled to continue working in close collaboration with Nokia to advance the ReefShark chipset by incorporating our latest DPU technology." Now, I'm not going to finish the quote, you can read for yourself, but clearly both companies are excited about optimizing their existing technology. The vice president and CTO of Nokia even commented that the extension of our strategic partnership with Marvell underscores Nokia's commitment to support mobile network operators with the industry's most advanced technology for their 5G radio access networks. So again, this is going to be a good catalyst for both of these companies, and depending on whether or not you are already invested into these companies, maybe you could put these on a watch list. Now, I personally own Marvell technology, but I don't own Nokia yet, even though I think it could be a great buying opportunity. I'm just waiting for a better entry price. And then lastly, we're going to talk about Fisker, which is an electric vehicle company, where various analysts believe this company could literally surge by 100% in their share price. Right now, Fisker stock trades at around $7 per share, while professionals believe the company is worth anywhere between $8 and $28. Fisker, ticker symbol FSR, which is an electric vehicle company, is differentiating their business model from other electric vehicle companies such as Rivian as well as Lucid, which we talked about in a previous video. Fisker's team said, and I quote, "Fisker targets share gains in a currently neglected EV space. Well-styled smaller SUVs with tech-forward features, with lower-cost pure CUV on the way." The team went on to say, "We see 40 to 50% upside to 2023's revenue consensus and a path to approximately 40,000 deliveries, easing the negative sentiment surrounding the former SPAC and unlocking a higher valuation," end quote. Essentially, professionals as well as investors are now taking notice about the future upside of Fisker, to where the team initiated a stock outperform rating on this company, according to Evercore, with a $15 price target, which means that the current share price of $7 could more than double up to $15 over the next 12 months. However, with that being said, we need to make sure that we are taking proper risk management into consideration before we buy all of these companies or even some of these companies. The current macroeconomic environment is still pretty negative, and there are multiple things that could still cause stock prices to trend further downward. But as of late, at minimum, these seem like good holding opportunities, and at maximum, a few of these could be a good buying opportunity depending on your personal portfolio. So with that being said, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and I'll see you in the next YT video.